Welcome back to another episode of The Toonie Show. In today's episode, we are going to teach you how to gain exposure to the American stock markets by using ETFs. We will take a deep dive in three popular ETFs that are universally loved by investors. At the end, we are going to break down if investing in a hedged ETF is right for you. There are a lot of great options for Canadians to participate in the American stock market. One of the easiest and the cheapest ways is to buy an ETF that tracks an entire index. Vanguard offers ETFs like the VOO, VFV, and VSP, which tracks the S&P 500. Let's take a closer look at which option is right for you. VOO is traded in American dollars, while VFV and VSP are in Canadian dollars. If you already hold American dollars, VOO is the most direct option. However, if the money you're looking to invest is in Canadian dollars, you could consider VFV or VSP. The main difference is that VFV doesn't hedge against the currency risk while VSP does. The reason why people choose to hedge their funds is because they want to reduce or eliminate the fluctuation risk between the Canadian dollar and the greenback. For example, if the USD is trading at $1.35 Canadian when you bought VFV and it drops down to $1.25 the day you sell it, that means your money would have lost 7.5% in value, assuming there was no change in the underlying stock price. Instead, if you have chosen to invest in its hedged counterpart, VSP, you would have come out relatively unscathed. So, what is the catch? The biggest downside associated with buying a hedged ETF is the cost. You are effectively taking out an insurance policy in the event that the currency goes against you. The insurance premium will diminish your returns if you don't end up using it. It is also a recurring cost as the policy expires and it needs to be renewed. So, how do you decide which one is right for you? Asking if you should buy a hedged ETF is kind of like deciding if you should buy car insurance. The obvious answer is that you should get it if you know you're going to end up needing it. In all seriousness, it all comes down to the risk you're willing to stomach. Between the years of 2020 to 2022, the US dollar has gone up to as high as $1.47 Canadian and as low as $1.20. That is an 18% swing in the currency alone. A general rule of thumb is that VFV is great if you have a long-term holding horizon where you're holding it for a minimum of 5 to 10 years, and you don't need the money anytime soon. This will ensure maximum growth by investing every dollar in the fund. VSP is great if you might need the money in the next year or sooner. The only caveat is that you'll be paying a bit more to insure against the downside. But you can sleep easy knowing that the short-term fluctuations in the currency won't negatively impact your financial goals. Thanks for watching this episode of The Toonie Show. If you enjoyed this video, please drop us a like and don't forget to subscribe for more Canadian financial content. Leave us a comment below on what you would like to learn, and see you next time!